Welcome to TradeTheNBI.com. This is John's report is for the 22nd. Well, we popped up to the new highs off the buy signal, but right towards the end of the day, and that the verdict, I think more interestingly, the guilty plea for Cohen caused a little bit of skittishness in the market. Probably going to be modest. We already expected there would be some fill back into the positive extremes we had intraday, but from a daily standpoint overall, it was still looking good from the overall buy setup that took place before. But what we've been seeing is the rising orange, and when you hit that rising orange, and now particularly that you see here with the orange rising above the green on the DOC, this becomes a critical point because you would expect a pivot lower of the orange in order to expect a continued rise to new highs. So if that doesn't happen, then you're going to get just the opposite, which would be a crossover of steel orange, and that could be the first beginnings of another one of these kinds of dips that takes us back to maybe, now we have rising 76, rising green. So as those rise, the little support levels continue to improve. However, we do have that dip below the red line, which took place right back over here. If I can get some cooperation from the little machine. So we had the dip right back here to the 61% on the little tail, and then we had the open from right there that led to the new buy. But so we still have that fill back area to take precedence again, and so we'll look for that to take place going forward. Here we have the NQ, still weaker, and it's been below that 76, and again putting in a little bit of what some people might see as a hammer. I don't really think you can call some of those candlestick patterns that very effective in these kinds of situations, because you get a lower range that's been in consolidation. This doesn't have the same impact, particularly with rise and shakeout and that. Though at this particular point with the negative shakeout, and it doesn't take much for that to roll over, and you'll notice that the NQ did not match the S&P. So it just adds a little bit more to the volatility because there's a degree of uncertainty, and this is what we're seeing. The bolstering effect has been the massive rise back of the euro, and like I mentioned before, we expect it to come right back up to this upper band line, and particularly as we start to see any kind of weakness. Now, positive extremes have come in, and if we start to see a little bit more of that closing between the steel and orange here on the DOC, along with you're going to need some short increase in the fact that it's below the 7.5. It's just got way oversold. So there could be still a little bit more left in the euro move, though we're seeing that good chance that we're going to revisit some of these things that are just below it, and I think that just depends on what we see coming out of the EU. But that definitely helps mitigate decline for the S&P. So the rise in the euro happened just at the right moment to keep things from falling apart, because obviously there's going to be talk of growing Mueller impeachment kind of things with the whole political aspect of things. Doesn't seem to be all that much, but anytime you have a market at highs and you create some uncertainty always leads to selling, which usually converts itself right back here into bonds, way elevated from where they should be, but that's been that case for a while, and that's simply because risk avoidance. People will take lower yield just to avoid any risk whatsoever. And oil is still maintaining in this, elevated but consolidation, so it's not breaking out to a point of instability, and that actually makes things sustainable from a broader standpoint. And again, we saw the rise coming in here with gold on this setup with the rising shakeout. It's finally still weak, but it's got to get above that negative 13.5. But even here, if you get a move back up a little bit stronger and it comes back down, it's that second wave that would be far more compelling from a buy standpoint for at least a sustained run. So I shrunk this back here on the 5K chart so we could get a look at, we were talking about dip all the way back to this, and I pointed it out on the Skype chat as I put up the chart, and sure enough, just a fraction of a point from the full retrace of that one. Certainly the second one already fully engaged itself, which was right here. And no coincidence that at this particular spot of that second positive extreme, which we have to, turns out to be a white candle. Now, we ended up making a new low off that, and even though we've had this rise, we're starting to see a little overbought, so we would expect those lows to be revisited on this little bit of a breakdown. That it was politically motivated may not be as dramatic. It's nonetheless still the white candle is going to produce a return back to it. It's just a matter of waiting for the key types of signaling, which would be obviously in this case rising shorts, the closing of the mouth, and again orange crossing above will give a clear indication. Here it's a little easier because in my standpoint, when you get the red and you're at the 38%, that becomes a great pivot point going back, and even as that took place, you had the dip below the 23%, we'd be looking for the exact same thing. It's a little tougher with these because if you wait, you often miss it. In this case, you've had two hits at the 38 that couldn't hold, and that becomes even more attractive when you start to see them unable to sustain the moves like that. In fact, we can start to increase this because from an intraday standpoint, it turned out to be really fun. It's easier to, I always go to push the little side button there, but I always find it's faster if you can just click the chart and have the little white lines pop up on the histogram or whatever, and then send it over. Okay, Instant Magic increased the size of the chart here for yesterday's action, and what we had was that move above the 50% led to a white candle, which is always interesting because we know we're going to get a retrace back to it. Of course, it did like almost immediately, and those were the positive extremes. Of course, we had that dip right here that we were expecting to come back to, which ended up filling before the day was out, not an issue. And then we ended up with a huge conglomerate, and then usually when you get that, you're starting to look for that decay, these pops of the orange above the 13.5 DOC, and that's exactly what led to what I was talking about would be the first modest retrace, which literally was, about equivalent to, well, in this case came to about the opens there. We were looking for a little bit more of that, but what happens is you get that retrace coming below to the 61% range here, and then we started to capture the closing of that mouth. That led to a spark back up, new highs, but as I pointed out in the chart that I posted, it was going to happen under lower shakeout, and that's exactly what you look for. It's that second burst high where you're not getting the matching support level, and sure enough, once that happened, we started getting even more of the 13.5 moves of the orange, and that led to actual DOC spread, which gave us the full retrace down to a 50%, which was rising. Go figure. Rising lows usually draw back down to the zero number. But that ended up filling the white candle all the way at the end of the day, right back over here. Then we popped out, and then the news obviously broke a little bit after that, and that's sent the market into the spiral lower, which started filling all those previous day positive extremes. And it just works beautifully. It was a nice increase for them on the plus side, gave them plenty of room to get out. They pushed it to new highs, giving them a secondary way to exit it, and sure enough, then sending it all the way back down, producing the new white one, which I ended up making the lows, and then we ended up with a little bit of a bullish tint as you had a fade of both the shorts and then the orange dipping below. And now we got into the overbought with the blue. It's retraced partially, but we still expect it to come back, even if it continues to hold on for a little while. That it should still fill that back in, just a matter of picking the opportunities as they come. So this is that beautiful increase in volatility back up into the 28 range. Nice, just clean action. No objections to it whatsoever. Just got to keep playing it with what delivers to us. And it's been actually a really good month as far as that increase in volatility. A lot of people thought it would be sleepy summer, but no. And I think it's only going to get more active and more volatile going into September and particularly October as election years, because so much is riding on continuation of the economic path that's being led versus stopping it until the next election, which then you're looking at a couple of years of no action. So a lot of expectations, particularly since the market is going to be looking for down the road general guidance, and that's particularly important, especially as you've had a heated up economy, because anything that potentially can derail that movement is something the market's going to be looking for. Nothing dramatic on that front yet, because I mean, obviously you're 28.55, not exactly concerned that there's going to be a contraction of any kind. So that's the long and the short of it. I'll keep posting relevant charts as they pop up. Trade well.